In this video, I'm going to take a look at the dollar and gold, and I'm going to say again that I don't think this basing pattern is over in gold yet. We had a nice little rally in the mining stocks yesterday, and everybody's gotten very bullish on the metals, and they're expecting it to just take off and run to the moon. But I'm going to caution again that we don't have a rally in the dollar yet. And so far, the only thing that is happening is that the dollar is moving down into its, an intermediate cycle low. And you can see here we've got a potential swing forming again in the dollar. And as the dollar is moving down into its intermediate cycle low, gold has been moving up. And that decline in the dollar has been really, really long. That intermediate cycle is probably, it may be the longest in history. And so, it's not unusual that this rally in gold has been really extended and stretched because it's following the dollar down. As the dollar goes down, the gold continues to go up. Now, I want to revisit the triangle basing pattern theory again. Yesterday I said the triangle was off the table, but as I got to looking at this a little bit more, it occurred to me that it may not actually be off the table. I was assuming that this pivot right here in April, I believe it was, I was assuming that that was going to be the upper triangle, or the pivot to construct the upper triangle trend line. So let's say like that. And if you use that as the pivot, then yeah, the triangle is busted because we've gone above the upper trend line. But if we just use wherever this intermediate cycle tops as the pivot, then the triangle is still in play. So if I get rid of the bias that I had to use this as the pivot, and instead I just use wherever the top occurs, then that that would act as the pivot. So as long as gold doesn't just keep going higher and trade above this top here, then we've still got a triangle pattern in play. So now let me zoom in, or actually let's just leave it as it is right here. I'll show you. We've got a resistance zone at about 1306. Okay, so you can see the top in 2015. The yearly cycle high came at about 2015. The first leg up in the baby bull came at about 1306. I'm sorry, 1306 here, 1306 here. As we were topping last year, the first correction, or one of the corrections down, came down to retest that 1306 level, bounced, and then when we broke it, the October rally came right back up to test it. If we just forget about the election night shenanigans, you can see that the rally in October came up just high enough to test that 1306 zone, and we're pushing right up into that level again right here. So my feeling is that a likely spot for this intermediate cycle to top would be at that 1306 resistance zone. So I'm going to caution that I don't think this is over yet. Once the dollar starts its rally out of its intermediate cycle low, then maybe we can get up here and tag this 1306 6 level before that happens. Maybe on the FOMC meeting, maybe on the ECB meeting tomorrow. Those are 2 potential triggers. But then I still think we have to have something that qualifies as an intermediate degree decline, and in my opinion, this just does not qualify. An intermediate decline needs to complete at least 1 failed daily cycle, and we did not do that here in May. We did not go below this March low. I'll widen this out. You can see that even during the most powerful rally that we've seen in the last 5-6 years, the baby bull rally out of that bull market bottom or bear market bottom, you can see this ICL decline into last May. It was a very mild decline, but it still completed the 2 requirements necessary for an ICL, an intermediate cycle decline. We had an ABC wave pattern, so first leg down, a bounce, and then a second leg down, and we broke below this daily cycle low. Not by much, but we completed that requirement by breaking below the previous cycle low, so we had a failed daily cycle. So even during this most powerful rally that we've seen in 5 or 6 years, the ICL in May still completed the requirements for an intermediate decline. And we just don't have that yet. We don't have this correction did not unfold as an ABC correction. There was no rally in the middle here at any point, and we definitely did not complete a failed daily cycle. So I'm going to stick to my guns on this one. When the dollar starts the rally out of its intermediate cycle low, which is due at any time, then I think gold will start moving down into an intermediate decline, one that will complete those requirements. It'll unfold as at least an ABC pattern, and it will complete a failed daily cycle, which if that is going to happen during this daily cycle, then it would have to drop below the May low. Now I don't know that it's going to do that. This cycle is could potentially be right translated, and we have moved above this top, so we may get a tag of this resistance zone, then we get a daily cycle low that comes down and bottoms above this May low here at I believe it was about looks like 1214, 1213. Bottoms above that, and then we rally again, and then come down and break that cycle low. So let's say maybe what we get is something that looks like this. We come down here. If we get a normal length cycle, we would bottom sometime right around the end of June, beginning of July. Maybe it bottoms somewhere in this zone, and then we get a bounce, and then we get our failed daily cycle, maybe into early August, something like that, and we would get we would drop below this daily cycle low. That would be a failed daily cycle. We would have an ABC pattern down. So because I think that an intermediate rally in the dollar's got to be longer than just 2 or 3 weeks, this now becomes the most likely pattern, something along these lines. And that still keeps the triangle pattern on the table. It's just I was probably premature in assuming that this pivot here had to be where the upper triangle would be constructed. I think maybe the correct pivot is to just use wherever this daily cycle tops as our pivot, and that 1306 level could be the potential spot for that top. So I would be leery about trusting that rally yesterday. We've seen the banks paint the tape, how many times to get people to do the wrong thing at the wrong time. And until we get that rally out of the dollar, until the ICL is complete and we get at least a multi-week rally out of the dollar, I am not going to be prepared to just pile in long on gold, because I think gold will continue to trade inversely, more or less. It doesn't correlate every day, but more or less to the dollar. And as the dollar has been dropping into its intermediate cycle low since the beginning of December, gold has been rallying. So I would expect when the dollar starts to rally, gives us a multi-week rally, I would expect that would be the driver for gold to push down and complete the requirements for an intermediate cycle low, and maybe to test this triangle trend line.